Hey everybody, this is Boris Schlossberg. Welcome to the Trading Battle. Today we ask a very, very interesting question. Cats have 9 lives. The big question is, does crypto have it as well? We have two grizzled crypto veterans today, Evan Aldo and Forrest Przybysz with us, and they're going to talk all things crypto with us, especially after, of course, we've had such a huge, huge correction in the market. And we'll discuss everything that's going on here. Hi, guys. Hi, Forrest. How you doing?
Hey, I'm doing well. Thanks for having us on. It's always a pleasure.
It's always a pleasure to have you with us. I guess I'm looking at my fake Rothko behind me and your wave. I'm trying to figure out which one should we NFT first off of these paintings. And then we have Evan. Evan, how are you? Evan, where are you coming to us from?
I'm in Fort Lauderdale, Florida.
You're in Florida. Nice. Okay. Yeah. All right. So wherever we are today, it's hot. There's no place to escape in North America. Yeah. So both you guys are pretty grizzled veterans of the crypto market, which means you've been in it for more than 6 months because obviously it's a very young market. Yeah. And I just wanted, first and foremost, I just kind of wanted to get your personal reactions about the very, very severe correction. I think, Forrest, last time you and I had you on the show, bit was around 60. It's considerably lower since then. And I just wanted to find out how you guys have been dealing with the correction, whether, it's been significantly difficult as far as trading, and generally just sort of your feelings about crypto going forward. So I'll start with you, Forrest, and then we'll go to Evan. Let me know.
Yeah, so I won't pull up the chart, but if I were to pull up a chart of total cryptocurrency market cap and just I'll put it on the logarithmic view and just draw a nice steady trend line. We're sitting near that trend line now. And over the long term, we have just gone very far up. In fact, you know what? Why don't I just pull up that chart total? Actually, I don't have this chart on this tab. That's okay. Even if you just look at Bitcoin as a proxy for the market and you just draw a long-term trend line, and we move out to the weekly here, I want exposure to this growth, this long-term growth, and the total cryptocurrency market cap is actually growing at a faster pace than just Bitcoin because we've seen altcoin dominance rise. So in the long term, as a long-term investor, I just want that exposure to the growth in a very, very fast-growing disruptive technology. Now, that comes with speculative bubbles, and we get to enjoy the 5, 10x rides, sometimes with altcoins, 50x, 100x returns. And that's why it's really important to remember to take profits. But it also comes with the 70, 80, 90% crashes. And you just kind of, being in crypto, have to be willing to weather the storm. And right now, it's been one of those storms. We're weathering it. We're getting a nice little bounce. We'll see if this is just a relief rally or if we're going back into a bullish market. So I'm here for it regardless.
Yeah. And Evan, I think since you're a technician at heart, I think the strongest technical support for crypto is that every time we make a lower low, it's a higher low. In other words, we bottomed out first. We had a big spike in the original move to 17, and then we bottomed it around 1,000. This move is kind of bottomed at 20,000 or 17,000. So every time we're bottoming significantly higher from the prior bottom. And if nothing else, just from a purely technical point of view, that's got to give you some level of hope, right?
Right. Well, it's trending up with time, which is kind of, the thing with trending up in time is it's kind of like sometimes it may take years to come back, those type of things. So some people would be happy with that. But from a trading perspective, right now, it is kind of just trying to catch the falling knife. Like, where are we in our bear market? And if you take a quick look at my, I'll go over to my chart right here. I want to zoom out a little bit on Bitcoin right now. So the first thing, from a big perspective right here is on our monthly time frame, money flow generally coming down. It's the lowest it's ever been historically here. February 2019, when we bottomed out last time, we've gone lower than that area. Also kind of, what we're trying to find here is what I like is kind of my secret time frame, my 16-day. Not too many people look at the 16-day. And if you look at bear market bottoms here, let's go on our logarithmic scale so we can see it a little bit better here. this is our bear market bottom. See this deep? These are called deep anchor waves in Market Cipher. This green dot right here. Green dots are buy signals. This marked basically the bottom in 2015, right after we bottomed out. This one marked the bottom in 2019, right after 2018, a few months after. And right now we're printing one. Many would say, so how this works in Market Cipher, these confirm in 3 days. Many would say it's most likely going to confirm, we're going to come up. However, we're in a time where the Fed is still hawkish. It seems like they're still going to keep raising rates. We have a lot of potential black swan events, Taiwan, things like that. What happened here is you printed the green dot, it didn't confirm, you went down farther. You printed the green dot again months later, went down farther. Then finally, you got it to confirm. So I'm not entirely convinced here. But from the perspective you were talking about, I mean, yes, if we look right here, this was the first bear market, basically. This was the second one. This was the third one. It's just a matter of, is there another leg down towards the end of the year, maybe even into early next year, depending on if we go into a recession, or are we kind of home free here? That's the big question. My view is that you're probably going to drop down some more, and we'll talk about that a little later, why I think so. But,
well, you just dropped down a lot more. So my question is, if we drop down to the second bear market bottom, in other words, if we break effectively, this is right now a verified uptrend, right? Like if you're looking at that long-term trend, there is nothing here that technically says the trend has been broken. We've had higher lows throughout. But the question is, how would your opinion change if we actually challenged the second bear market bottom? That would be technically a much more damaging construct, don't you think?
You're talking about like 3,000, something like that, or?
Yeah, I mean, I think maybe we can go back on the chart, like you had. So that second one where you're looking at it, so this is the second bottom is somewhere that's 3,000. It's about 3,000.
That's 3,000. Yeah, that was December 2018.
Which is that would be horrific from these levels.
That's a 95% correction. Yeah.
Right. It's quite a lot. I mean, that would really suggest a complete, I think, what's the word I'm looking for? Capitulation, or just exit from the asset, effectively, just decline from the asset.
Basically, so, that would be similar to Amazon in the .com bubble, down 95% and then came all the way back. So it's possible. I don't think it'll go that low, but it is possible. What it looks like to me, it looks more like, real quickly, 2014 right here. If you look at this low, this is kind of like 17K. Then you had one more low farther. And see this yellow line? This is your VWAP. It's curving up just like it did here. I don't know exactly what happened. I have to go real far back in the charts to see, but it could have printed that green dot like we are right now, then came down farther. So I'm not seeing enough evidence to really support that we're kind of at a bottom. And the other thing too, if you look at Bitcoin dominance, a lot of times, this is another thing that I look at, which is really important to look at. We're really low in Bitcoin dominance.
Sorry, can you explain, for those people who are watching may not be familiar with the idea of Bitcoin dominance, could you explain what that means?
So that's a percentage of the total crypto market cap that is Bitcoin. So Bitcoin is the king, obviously. It's the biggest market cap of all the cryptos. Usually, obviously when the mania phases go, when everybody's feeling euphoric, they buy altcoins, and those will outperform Bitcoin. But Bitcoin typically outperforms by a lot. The money that's in Bitcoin Bitcoin's market cap is much higher than the altcoins when we bottom out. We're not seeing that unless it's something different this time. You see, when we bottomed out in December 2018, Bitcoin dominance was around here, much higher than where we are right now. We're at June 2018. So we could have some more months to bottom out. See, the last cycle bottom was in December 2018. So it could be a few more months. Also, if you look at the weekly on this time frame, you have money. This red is money flow. Money flow is coming up. So that means that there's a good shot that Bitcoin dominance will rise. And that happens typically as the market corrects. So we'll talk about it in a little bit, but I think we could have a big crash within the next month, definitely.
Interesting. So, Peter, do you think, I'm actually curious, do you think that the fact that Bitcoin dominance is lower, is that a bad thing? Or do you think that's a good thing because maybe the market is becoming more sophisticated and more diversified, that there's just sort of, Bitcoin used to be the only show in town, and now there's actually useful other large cap trades. I mean, ETH obviously being one of them, but just sort of there's far more interesting protocols besides Bitcoin, and the sophistication level of the market is perhaps greater. Do you think that could be the reason why Bitcoin dominance is not as prevalent now as it was in prior bottoms?
Me?
Yeah, I'm sorry, Forrest. Yeah.
Yeah, absolutely. I think that is exactly it. So if I pull up altcoin dominance, which is just simply the inverse of Bitcoin dominance, it's the exact same chart, just flipped upside down. You can see I've got a green trend line there. I've got this, just with the white line here. What if you look at the crypto space now, and you look at the crypto space holistically back in 2014 and then in 2017 again, it is not even comparable. In 2017, you just had a lot of ICOs on top of Ethereum. You had a lot of altcoins that were essentially just Bitcoin forks. The narratives were completely different. It was all around digital cash for the most part. And then, digital cash plus privacy, faster digital cash. Now we have narratives that really did not even exist in those previous bull markets. We have NFTs, we have DeFi, we have Metaverse, we have all sorts of different things that we did not have. And we are even with all of that, we are only now challenging the altcoin dominance levels that we challenged in the last bull market, right? And this was just an all-time high of hype and mania around ICOs and the potential that a lot of these altcoins could be something big. Most of them went to zero. Even really solid cryptocurrencies saw 99+% dips. I think it was Cardano, which is a top 10 cryptocurrency, saw a 98 or 99% drop and was able to still do I believe a 200+ X this market cycle from its COVID bottom, its pandemic crash bottom. I'd have to go and check that, but essentially we're seeing a totally different ecosystem now than what we were there. And we really have not gotten, in my opinion, to bubble levels of altcoin dominance. Yes, we did have, bubble levels in terms of, meme coins. And at the end of the day, I think the market's just maturing. And we've kind of talked about this off air before, but we're seeing these protocols and these altcoins learn a lot about tokenomics. You're seeing the market learn about what works firsthand, what works and what doesn't. You're seeing projects adopt different styles of tokenomics. We saw meme coins and Ponzi-nomics this last market cycle, this last bull market, and now we're starting to see something. I didn't realize that was like an official term for it called Ponzi-nomics. It's just you might go the good old days used to just call it Ponzi scheme, but sorry, go ahead. I didn't mean to interrupt her. But so now we're getting a little more sophisticated, right? Yeah, we're getting more sophisticated. In my opinion, I am not a very big Bitcoin fan. That is a very unpopular opinion for somebody who's so into crypto. I'm a very big crypto fan. I think Bitcoin was good for what it was, but I think it's old technology that's going to end up being replaced. I don't think it's sustainable long term. And I don't think that the first run at any sort of technology has really ever been what's succeeded. Even if you look at the .com bubble, a lot of the biggest websites and biggest platforms weren't even founded until well after the .com bubble burst. You have Facebook, Netflix, right? All after the .com bubble. So I think the best is yet to come for crypto, and we're just kind of washing out some stuff that doesn't work, and it's a lot of trial and error.
So you mentioned three narratives, and I'd like to just have you describe each one in a little bit more detail, because I think it's interesting. You said NFTs, Metaverse, and DeFi. If you could explain, let's just start with NFTs first, and then we'll go to Metaverse and DeFi. What are each one of these narratives? What kind of value propositions do they offer people that are different now than they were in 2017? So NFTs, what would you say would be the key value propositions that an NFT offers that's not available in the real world, for a lack of better?
Sure. So the biggest The biggest value proposition for NFTs that I see is the tokenization of digital media. And what I mean by digital media, I mean like anything that you can save with a dot text, insert 3 letters here file extension. So a .jpeg, a .png, a .mp3, any form of digital media, being able to tokenize that and be able to send that and create scarcity with that and identify it and create ownership of that digital media is very, very important. So for example, working with on founding a project right now where we are trying to create music, allow artists to sell music NFTs to listeners so that you can actually own that song as an NFT, and within the metadata of that NFT include the licensing rights that explicitly detail how you can or cannot use that song. Imagine not having to go through a third party record label or licensing company. You can go directly to the artist, and the artist can go directly to the market with their song and sell it and license it through an NFT. Same thing goes for, digital art of any kind. We're seeing a bubble right now. We're seeing all these profile picture projects where they're just, different 10,000 whales, 10,000 monkeys, 10,000 dogs. I think we're going to mature out of that, and eventually these real use cases will emerge. But to touch on DeFi, it's just value transfer. Any decentralized finance, essentially just decentralizing any financial product that you could think of, being able to do loans on chain. Just it's all about cutting out the middleman, right? So rather than having a bank issue a loan and decide who's worthy of a loan and who's not worthy of a loan, essentially, or having to deal with being an accredited investor to invest or trade on a certain exchange, being able to decentralize that and not have a middleman and have decentralized ownership of those companies and protocols. And then lastly, Metaverse is probably the one that I'm the least bullish on. I think it's oftentimes synonymous with virtual reality. I do think there will be NFT of a lot of blockchain gaming and a lot of the stuff that we do on web, and you'll start to see more Web3 and transfers of value creep into the Web3 space and creep into games, but I'm not super bullish on VR.
Like just to use a very boomer example, like virtual Nikes in some game that you would have, and they would be NFT, therefore they would have some scarcity value, and then you could trade those, within the metaverse. Those kind of things, which are already happening quite a lot now. And there's just, there were during the boom time, there were some people paying $400,000 for Louis Vuitton NFT bags in one of these metaverse games. I forget what it was, but that's what you're talking about, in a sense that within the metaverse there'll be digital goods that will be traded and collected.
Yeah, or like World of Warcraft, where you can get a sword, your character gets a sword, and there's already a secondary market, but it's a centralized secondary market where the game takes a cut.
Right.
Or Call of Duty skins or Fortnite skins. These kids are maxing out their parents' credit cards, buying the cool outfit for their Fortnite character. Well, what if they could actually resell that, that skin or that outfit for their Fortnite character later on? That'll eventually be an NFT. I think we'll see more games go monetize in a similar fashion to what they're already doing with these digital goods, but they'll just be NFTs instead, so that you can transfer value more easily.
Interesting. Okay. All right. Sounds good. So guys, I want to start us trading for this show. And the first challenge of the day today is to just place the best trade right now that we're going to close at the end of the live stream. So you got like 40 minutes, the next 40 minutes, what's going to pop? And I will guide you my way. Asia session generally is always around this time, tends to create some kind of a breakout in the big threes. I trade that all the time, but I'll leave you to your decisions. But give me your best trades. I'll start with Evan. What do you want to do?
So, for scalp trading, these are a lot of fun. So for scalp trading, what I always like to do here is just take a quick look at Ethereum on Bitcoin on just low time frames and see if we're hitting any fib levels. So let's just start with Ethereum here. I mean, let's draw a local fib level, something like this, see if we're hitting anything. Ooh, we might be. And it looks like this might be really good, actually. So I think I already know what I want to do.
Do it, baby. Do it.
So yeah, this is perfect. I actually probably want to enter this before it is too. Yeah, this is okay. So here's going to be the trade right here, and stop loss probably below, stop loss above there, and we'll do the.
Can you call out the? I'm sorry, it's hard for me to see the numbers. Okay, I see it. So
yeah,
you're in.
It would be. Let's just. I want to put it in real quick, then I'll talk about why. But it's basically the money flow coming out in these lower time frames, and we're hitting a fib level at the same time here. So what we're going to do here, let's do it because I have a few other ideas I want to do. Let's just risk like $1,000 on this one. Nothing too crazy. $1,000 out of our $10,000 account, and hopefully we will see an outcome during the hour. So we're going to do the stop loss above here, which is going to be around 1720 or whatever. Right there. 1720, and our take profit, let's put it right here around just 1698 around there.
Sounds good.
And risk 1,000, and we should be able to get that going here. Why is there not the tick area? Let's the lot area. It's worked before.
You want to hit it, Marcus? You want to hit?
I am on market. Let's see here. I had it working right before. I was testing out right, and it worked. Weird. But let's just talk about real quick why I'm in a place to trade. So when I look at, let's just draw, a local fib level here from top to bottom there. We're rejecting off of this point right here. This is a pocket on your lower time frames. And what I like to look at for real short-term trades is the 6 minute and downward. See you have money flow curving outward, high money flow curving outward. That means we're over exhausted. We also have a blood diamond printing here. That means we should come down. And we also have on your 3 minute, that's good curvature. So what we want to see, high money flow and curvature. And then on our 1 minute, this is perfect. Money flow, great curvature. And then money flow crossover into the red here. We're due to come down a bit. So we're probably going to hit this level at least. So let me try it again. Or we could, while I'm trying to get.
I'll let you. I think the lots. It's a matter of specifying lots for some reason. Or maybe you could do it.
Oh, here we go. I think I got it actually, because now it's letting me. So those are the.
Letting you do it.
The opposite here.
And let me go to Forrest and see what he's got up his sleeve on his trades, and then I'll come back and I want to talk a lot more about money flow and all of the analytics that you're using. So, Forrest, I know you're not a scalper, but we're making you a scalper today. You're looking at Solana, right? Is that what we're looking at?
Yeah. So we're about 40 minutes late for my trade. That's okay. We'll see another opportunity coming up. So, if I'm scalping here, I'm going to be trying to trade with the trend. We had, a little bit of a trend break, but we're starting to see a downtrend. Right. We've got this moving average in here. It's nothing of significance, just showing us the direction of the trend is moving downwards. We've continually put in lower highs, right? Lower highs. And even just recently, we put in a lower high. Now, how I would normally trade this, if we could rewind time 40 minutes, which I know isn't fair, I like to do what I call a high-low method. So I just take from the low to the high, right? And I look for where price action crosses that line, and I draw horizontal, and that would have been the perfect support to start buying. But I want to actually go short here because we just printed this lower high. We got a bounce, and it doesn't look like we are going to challenge these highs again. You could make an argument for maybe some sort of a weird head and shoulders forming, but essentially we're seeing this resistance level fail again. So I'm going to go ahead and just put in a small short here, and look, if I can close it at this support level in a few minutes, or even, in 10, 15, 20 minutes, or at the end of the show, I'd be pretty happy with that. It'd be just a very small 0.5% scalp.
That's fine. So I'm curious why. So you have a trend line from high to low, and why does, the price action, where the price action crosses that trend line, why is that an interesting support level for you?
Yeah, so it's such a dumb method. It really is dumb. I'll be the first person to admit that. But if you go and back test this and you look at some of these high-low method just pivot levels, they work really, really well. And essentially what you're doing is you're simply assigning an objective way to draw a trend line every single time, right? If I draw along the bottom points, it's very objective, right? You can see we didn't actually come down to reach that level.
Correct.
Right. So it's
that's fair. All trend lines are objective. It's true. It's very objective to do it high to low. There's no doubt here. Right. Correct.
Right. So if we do it high to low, almost always what you'll see is the first part of a trend develop along this trend line, and then you'll see it break. And a lot of times it'll retest. So this break and retest is a level where this trend both failed and retested to regain it. And if we just draw a horizontal level, again, we're on the 1 minute chart, so we're never going to be perfect. But that just helps us identify a key pivot level that we otherwise may not have seen had we just been trying to come in here and draw some horizontal levels and try to identify it with our eyes. So this is just a little cheat that I use that's somewhat high percentage.
That's very interesting. Now, have you tried that on larger time frames, or is this primarily something you like to do on a short time frame?
It does work on higher time frames. Obviously, you have to be a lot more patient. And sometimes the bounces, right? When you're looking for a higher time frame, a lot of times you're looking more than just 3-4%. You're looking for 20, 30, 40% on the high long-term time frames. But it does work on high time frames as well. But again, it's not something that's 100% accurate. It's just going to help us find some of these pivot levels where we're likely to get a bounce like this. But I'm going to go ahead.
So what's interesting is that your initial analysis was, this is support level. I would have bought the bounce, right? Which is like where the bounce was. But now, having gone like 40, 50 minutes into the trade, you're like, but this bounce is very anemic, and actually, it looks like it's looks like it's going to be lower high. So I'm actually going to be short the position. It's kind of interesting that you can interpret it both ways depending on how the price action develops.
Right, exactly.
That's interesting. I want to go back to Evan for a sec. Evan, the money flow indicator is clearly something you're very passionate about. Could you give us a expert description of all of the sort of the basic things that it does? It seems like it, looking at me as a somebody who's a outsider, it looks like an oscillator to me from first glance. But
that's
clearly
it
does more than that. It clearly does more than that. Maybe you could just explain us to a little bit more detail and why you find it to be such a useful indicator for you.
Yeah, so the creator of Market Cypher, CryptoFace, he says the money flow is like water coming into a garden. The plants cannot grow unless there's water. So the price cannot go up or go down unless you have money flow going in the direction you need it to go. So what I could show you on, let's just go to Bitcoin here, just the standard like Bitcoin chart to show you.
Just to understand, what is it measuring? I mean, is it measuring volume?
Money.
Is it
money coming in? Yeah, money coming in.
So what does that mean? Does that mean it's aggregating the transactional value, the transactional value of buys and the volume of buys, the volumes of sells? Is that where is it accessing money? Yeah,
I believe so. From the different, so it's from the different exchanges such as Bitstamp or Coinbase. I know the creator of CryptoFace likes to use Coinbase because there's a lot of transactional volume on there. But if you go on Bybit, you can go on ACAP, they generally all follow the same trajectory. Some of the exchanges like Bybit that have very high leverage, those it could get a little bit different. But we like to look at it on Coinbase, just looking at the transactional value. A lot of people consider this one to be the best money flow indicator. There are other ones that compete with it, but they're very similar. So what I like to show you people, the first thing with money flow, just on a big time frame here, is look at this, money flow crossover right here. This led to about 65%.
Is that what we're looking for? Is that green to red, where it goes that green move to the red?
Green to red combined. This is the important part. Combined with curvature, you're looking for curvature too. Typically, it follows this pattern. See, downward, and then in bear markets, it's not going to give you as much. See right here, this crossover, from red to green here gives you a little bit, a little 18%, but then right back down. So there's a lot to learn about this. Usually you want to see money flow here is unhealthy because you're just seeing money flow just come up so quickly. You want to see it more gradual, like here. This is healthier, gradually coming up, because when something comes up very, very quickly, that's unhealthy. That means you need to have a correction. you come back down
Right.
typically.
It looks
And
like
it
it looks like a short squeeze.
Yeah, yeah. And that's the main thing. You could look at it on every time frame. Obviously, more for the scalp trades. What I like to look at is and you look at here, right here. This is a trade I made yesterday. I got in right on this money flow crossover. I really like to enter on the money flow crossovers, especially if they've been above the zero line for a while, especially in the 15 minutes. Really good for day trading. Look at that. Been above the zero line for a while. Good curvature. Money flow crossing into the red. Beautiful. And it's perfect when you're hitting a Fibonacci level. Go ahead.
What makes good curvature? What does that mean?
So, good curvature, just like this, coming up gradually and coming down, coming up gradually, coming down. Bad curvature is probably an example of probably bad curvature would be very choppy, not too much happening. See right here, you didn't really get too much out of this really choppy coming in.
You don't have any
you got that a little bit. Yeah, that's what you're looking for. But especially when you're
flat line.
Right. Especially when
so
you
that
come up
good curvature pretty much reflects a price wave. It reflects, there was a buying wave, it stalled, and then momentum turned down, and you took that just before the momentum, before price. Basically, what this is sort of showing, I think, is momentum precedes price, which is something I always believe. So upward momentum died, and price then afterwards followed, with it, right?
100%, yeah. And now, in bear markets.
Sorry, one last question about this. The blue, what's the blue?
So blue is momentum waves. Yeah, the blue this is momentum. So let me show you the textbook market cipher strategy here. And this is what worked perfectly here. So momentum waves, and these red dots are sell signals. And what you're looking for here is this is what I'll show you is a bearish divergence here. So you see momentum waves of blue coming downward. That means momentum is getting to be less. There's less power right here. There's less power. Right. And if you're seeing while these waves are coming down, you're seeing price continue to rise here with on market cipher A, we call these blood diamonds. These are like strong, sell signals. As you're hitting like a fib level or something, bam, right down there. So you don't necessarily want to, in this combined, look at how money flow is getting high here and starting to come down on this one. See right there? You can zoom in.
Yes,
money flow starting to come down. A lot of bearish signals right there. You see that, especially when you're use the Fibonacci levels as confluence, bam, right down. So it takes a little bit of time to learn here. And the other thing too, let me just show you, because people would say, oh, you're coming into the green here. Why didn't it work? Pay attention. These are your RSIs. This purple and this bright green right here, these are RSIs. When these RSIs are split like this is more bearish right here. They're split, more bearish. That means the move may not be as powerful, just like what we're seeing right here. Usually when they're split and bearish, split like this, see money flow starting to come up. Some people may be getting bullish, but these RSIs are split. So that means the possibility that we're going to come down is a bit higher. So, price bounces around a little bit. You may have to wait a little bit to see an outcome here. And then right here, this is a small bearish dip right here. See these coming down while price is coming up right here. You see it's coming up and then bam, right down. So that's like a scalp trade, like a quick scalp trade, something like that you'd be looking to do there.
Interesting. So, okay. And by the way, the quotes on Bit, I mean, you can't really scalp Bit for less than $100 because just the spread makes it challenging, right?
Yeah, I mean to scalp, you typically you do bigger positions for scalping. It's tight stop losses, 1%, 2%. You could crank up the leverage.
Yeah, 1% of Bit is about $200, which is really where the minimal amount of kind of trading you can give. Otherwise, you're just paying too much for spread and everything else on this.
Yeah, you could limit it to.
Sorry, I was going to ask Forrest, do you agree with that? That sort of if you're scalping, sort of like 1% of notional is kind of the the minimum amount that you really want to risk, because anything smaller than that is just runs into spread conditions, or are there instruments where you?
Yeah, so if I'm scalping, which again I don't do often, unless I'm just bored and looking for something to do and looking to roll the dice a little bit, because it's going to be higher volatility, higher risk, or not necessarily higher risk, but higher volatility. The cheat in your brain, just multiply your leverage times your percentage points, right? So if you're using, I like to use isolated leverage rather than cross margin. You can just go 10x leverage, and if you get a percentage point on whatever it is you're trading, that's roughly a 9 to 10% after fees. It's gonna be a 9 to 10% gain on your trade, trade capital or allocated capital. So, you try to shoot for 1%.
9-10% loss if you get clipped, but we don't talk about that.
Yeah.
We only talk about winners, right? They're no.
Well, I mean, all of this, it works the majority of time, but not all the time. Obviously, we'd be billionaires in a matter of weeks if it did. Yeah.
Correct. Yeah, exactly. I'm actually curious, for both of you guys, where is your risk reward spectrum? Like Evan, typical, like on a scalp trade, is it 1-to-1? Do you try to 1.5 to 1? Where are you sort of in your sweet spot of risking to rewarding?
My sweet spot is between 0.7 to about 1.25. Ideally, 1-to-1 is like if you could find a good point where it looks good to take profits there. Ideally, 1-to-1 is a sweet spot, but you're not always gonna, human error, not entering at the exact right point. But I try for 1-to-1 or maybe a little bit more. It all depends, if there's a nice big point of support or resistance that's 1.25 away, I'll take that usually. But if the support point is closer, at 0.7, I'll take that. Rather be safe than sorry. Anything below 0.7, I usually don't feel is the best risk reward ratio. Yeah. But right now it's like a 0.5, the one I'm doing, just because I'm trying to be in a trade just for the live stream. Rather be safe than sorry.
Right.
Want to win it. So yeah.
Sure. Yeah. And also obviously size. Now the other thing I was going to say is in terms of sizing, when you're scalping or just even when you're positionally trading. What's your? Is it a 2% risk? Is it a 5% risk? Where are you on the sizing comfort level?
Yeah, so it's between usually 1 to like 4%. 4% is where you kind of get pretty risky. 5% is a lot to risk on an individual trade, in my opinion.
Yeah,
because if you lose,
right?
Yeah, if you lose 5 in a row, that's a lot to lose. I mean, 1%. I tell people starting out, 1% is a very good place because if you lose 10 trades in a row, that's 10% of your account. That's not the end of the world. You know what I mean? Yeah. 2%, right. If I'm more confident, those type of things. You'd be surprised how quickly people don't realize how quickly you could build or lose an account with even risking 2 or 3% per trade, especially with leverage.
Absolutely. Also, are you a single entry trader, or do you scale into positions? How do you like to usually manage your trade entry structures? And also, are you a single entry, single exit, or do you like to scale out, like maybe single entry but multiple exit? What's your
it's a great style? So always multiple exits, and the reason I tell people that is because anything can happen. That's one of the biggest things to learn about trading. Literally anything can happen, and even if you take a lot of profits and just leave 10% or 20% in, and you're going short, say price just drops overnight, there's a black swan event, you could get rich there, right? You can make a lot if that does happen. It's rare that it happens, but if it does, even with 10% of the trade left in, if we crash, like something crazy happens tomorrow, it probably won't, but if it does, you're going to be there. Kind of like the Seam Taleb strategy, just keep bleeding for 10 years straight, then finally make a fortune when it finally does crash. One of those things. So for going in, usually I just go in at one point. For day trading or swing trading, more longer term stuff, let me show you my chart. One strategy I have for scaling into a position. This is what I could have did last night on my trade right here. So Bitcoin 15-minute. What I like to do sometimes is I'll put maybe half of my trade in right here on this money flow crossover, what I'm looking to get in for the short position, and then I'll wait a little bit. Maybe I'll wait for my 17-minute to go into the red a little bit after. So the 15 minutes is going to be first, then I'll put in the 17-minute. Maybe it's a little bit of a better entry, maybe $100 up. Or I could do 3. Usually 3 is the max I would do, or wait for the 20-minute right here. And then you see maybe you could have got in here when price came up a little bit. this area to get in a little bit more. That's not as important, but sometimes, you could use a little bit higher leverage. It is a little bit of a difference because this is like say you got your first entry was right here, your last one's right here. It's a 0.5%, so you can make a little bit more on the way down. This is if you have a lot of time. You're in front of the computer, you have a lot of time. If you just want to set it and take a walk, forget about it, wait till you get the notification for the outcome, then it's not the best strategy. But yeah.
Interesting. Okay. What about you, Forrest? How's your risk reward tactics and your sizing tactics? How do you usually like to manage your positions?
Yeah, so I trade less frequently. I'll wait 2 weeks for a trade. I'll wait 2 months for a trade. I haven't gone much longer than 3 weeks without trading in quite a while. Usually I'm looking for, I'm a reversals trader. So I'm looking for those big bounces and big reversals and signals that price action is turning around. Therefore, I'm looking for I don't like going below 2-to-1 risk to reward. I don't like going below 3-to-1 risk to reward. Those are the sweet spots that I'm looking at. I'll look for trades and enter trades if I think things are turning around at 5 or 6-to-1 risk to reward ratio. I'm trying to catch those big moves. That means I'm trading less frequently. And I will have a fairly high miss rate, right? Like if you're taking 5-to-1 risk to reward, you can be wrong more often than you're right and still be profitable. So you can be at 5-to-1, you can be right 30 to 40% of the time and still break even or come out close to profit. I think it's 20% win rate for 5-to-1 risk to reward. So I'm trading less frequently, but I'm also trading. I'll put some size behind trades. I personally don't love scaling into trades. I like scaling out of trades when it comes to taking profit. The reason I don't like scaling into trades, which some people love, and I'm not saying that it's wrong in any way, shape, or form. I just like to closely manage a trade. If it's starting to look like it's breaking through that support level or resistance level that I'm trying to trade and it's not going my way, I'll just exit the position entirely and reassess, let price action relax a little bit, and then get back in. I'll be happy to get back in. Or if we break through on the other side and I'm invalidated and we make support or resistance on the other side of the level that I'm watching, I'll flip-flop. So I'll go from being bullish to bearish, going long to short or short to long. I'm not afraid to put aside my biases. In that case, I'm looking for a shorter term trade. If I'm flip-flopping, I'm just, okay, my reversal level is invalidated. I'll flip-flop, ride the trend a little bit longer, and then look for the next reversal level. But I am not, I'm not day trading by any means.
Right. Right. But my point is that it's interesting. So because you have like sort of a 3-to-1, 5-to-1 R&R, you do a lot of probative trades. You're not in other words, you're not afraid to get stopped and go back into a trade. Like, in other words, reversals sometimes take 2 or 3 times to get right because we all know it's impossible to trade a reversal. Right. I mean, I day trade all day long and literally 99% of my day trading strategy is the fact that I give myself 3 opportunities at the same, structure. Because if I only gave myself 1, my win rate would be significantly lower, right? So that's the whole point is that you are you're willing to do more probative trades. You have there'll be a reversal, you get stopped out, reassess maybe 2 or 3 days or a week later, reversal conditions again set themselves up as price starts to bottoming again, and you re-enter the same setup more than once. Because that with a 5-to-1 risk reward ratio, you can afford 2 or 3 times into the same condition, right?
Yep, absolutely, 100%.
Okay. All right, that's interesting. Okay, what do you think about the idea of Evan's idea of like leaving 10% for a runner? I find that very interesting, specifically in the cryptos. In the traditional finance, you're never going to get 10x's. You're not going to get 100x's. We'll be lucky if we get 50% in 2 years because that's the market. I mean, if we're trading FX, we're lucky if we get 10% in a year, right, on an unlevered basis. Mm-hmm. But in crypto, I mean, there's just lots of opportunities. Even the major cryptos go 2-3x. I mean, look at ETH doubled, right? ETH went from 1,000 to 2 in a month. Right, guys? I mean, if you bought it at 1,000, you left a runner on. If you left a 10% slice, you're up literally, double your money on a position unlevered. So what do you think about that idea of, of leaving a 10% slice just in case you get a runner?
Yeah, absolutely. I completely agree with it. And it goes back to my long-term investing strategy is I never want to, there's never a point where I'm not at least somewhat exposed to this market because it is such an explosive market. Things can the sentiment can turn at a dime. Like we've been in a bear market, but again, we've seen Ethereum run from the bottom was at an 883 and it's already run up to $1,800, more than a 2x. In terms of just what could end up being a dead cat bounce or a relief rally, right? We could be going back into a more bullish structure long-term, bullish trend long-term, but even the bounces in the dead cat bounces and the relief rallies are very explosive. And that's in the second largest asset. You start looking down the list in some of these even more volatile assets, they're doing 3x's, 4x's off their bottoms just in a very short period of time. And just because they're lower cap and they're more volatile, there's tons of opportunity. So I agree 100%. I always leave some left over just in case it keeps running or just some exposure. And then, I'll just trailing stop loss it up until it gets stopped out.
So there are two interesting takeaways before we go to our second challenge, which is that in crypto land, first of all, leading a runner could be far more productive than almost any other asset simply because of the volatility of the asset. But secondly, which I think is interesting, and both of you, I think, trade this, even if I think Evan does the same thing. It's very effective to trade reversals because reversals both up and down, but certainly even if you're long biased reversals could be like you said, a 5x, 10x off the bottoms, things that just don't, you can't get in any other asset. It's the volatility combined with the possibility of the asset that really creates, I think, really interesting, very different type of trading strategies that you would have in FX or much more conservative traditional assets.
Yeah, absolutely. And then you throw in 5x, 10x leverage on top of that. And that's kind of where I like to live. And that's my strategy where I'm trying to catch these reversals and catch these bottoms. But if I might have a low win rate, but once I catch a reversal on 5x leverage and it moves 200%, that's a 20x. Yeah. That's off of the initial trading capital. I mean, they're just huge gains off of a single trade. And it's just a matter of being patient and looking for that one trade. That's at least my strategy in the crypto space.
That's actually interesting. I meant to ask you, Evan, before we go to challenge number 2, what is your preferred lever factor? Are you, 5 times, 10 times? Where do you usually find yourself on a lever factor?
So
it's...
For me,
go ahead. I mean, it sounds like it's 5, right? For us, like 5 is pretty much max. You're going to max out at 5 or so, right?
It depends. I had a trade go well on 30x leverage with Bitcoin last week, and it was amazing. But again, it was just a very tight.
You had a tight stop, and you just you had the risk, right? Yeah, that's amazing.
Yep, exactly.
What about you, Evan? Where are you?
So it depends. I mean, for a swing trade, obviously it depends where your stop loss is going to be. So if you have like a 10% stop loss, obviously it's going to be lower leverage, somewhere between like 2 to 5x. Leverage is a little bit relative too. I mean, if you have a stop loss less than 1%, you could go 100x leverage and just still risk 1% of your account. So it's a little relative. So basically for scalp trades, I go up to like 30x the most. Sometimes I've done more than that. There's not really a reason to go any more than 30x in my opinion. For a day trade, between 5 to 10. For a swing trade long-term, 2 to 5. That's my main trajectory. It's relative. It's very relative. It's more about how much are you willing to risk? How much do you want to bet?
Right. Well, it's interesting, but there's, I think many traders, especially new traders, really don't understand how leverage can either help them or hurt them. And I think, understanding the because some of them are like, oh, it's 200 to 1, 400 to 1, I'll take all of it. And of course, that's the road to ruin very quickly. So like understanding that 2 to 5 is pretty much the sweet spot of where you're going to be most of the time. And if maybe you go to 30 to 1 on a 1% risk, those are kind of good takeaways for people who are, should be watching. We're going to go to our second, because we're actually kind of running out of time. The second challenge here is for you to place a trade using your favorite crypto indicator. So I think Evan kind of gave away his favorite crypto indicator. Let's start with Forrest now and see if he's got a favorite crypto indicator, and he can start a trade for us, and then we'll go back to Evan.
Yeah, absolutely. So I'm going to use Crypto Stackers Pro here. This is Ethereum that we're looking at. And what you're going to see here is I am going to throw on the margin pressure levels. We went over this last time. I'm going to actually zoom in so you guys can see a little bit better. Okay. Actually, you know what? I think I was on the wrong. Yep. You guys should be able to see this now. I just refreshed. I was on the wrong tab there.
Okay. So we're watching.
There we go.
ETH. We're watching ETH. Okay, we have ETH.
Yep. I'm going to throw on the margin pressure levels. This is essentially showing us where does the buy pressure run out of steam, right? Because as soon as price goes above $1,767, you can no longer buy on 2x long leverage and hide your liquidation point, protect that liquidation point below this local low of 883, which we know is going to act as pretty strong support if we were to come down here. So traders that are looking to enter on 2x long leverage and keep their liquidation points below this level, they can't enter anymore. And that's why we've seen this level now hold twice as resistance. Now, what we also have is confluence between that and our last local highs, 3,600 short level. So at the same time, simultaneously within a $50 range here for Ethereum's price, we've got buy pressure leaving the market, leveraged buy pressure leaving the market, and we have leveraged shorting pressure entering the market, right? And that's why we're getting some of this resistance. Now on the top side, when we just had
that reminds me, by the way, that sort of the 50-point line reminds me of like a medieval knights jousting at each other at that point of contact there.
Right, exactly. And it ends up forming very strong resistance here. Now, we also have what could be a rising wedge. We've kind of got this weird structure here in the middle where we came up a little bit high. Usually those resolve to the downside. I'm not a patterns trader, but I like to know my patterns just in case, just add that extra level of sentiment. I don't love the idea of shorting ETH from a fundamental perspective, but from a technical perspective, we're running into all of this resistance. I could easily see us fall back down to maybe, if I'm going to throw another local low on here, maybe this 1514 level, which is our 3x long margin pressure level off of our last local low. And you can see the 4x held as support. We popped up. And now we have not come back down to test this 3x. So I'm actually going to short Ethereum, which is absolute heresy on my crypto channel. I am very bullish Ethereum, but because this is a shorter term swing trade, I'm going to short ETH here. In real life, I am long Ethereum in a longer term fashion, mainly just spot ETH. But yeah, I'm gonna go short on ETH here for this trade.
Okay, sounds great. Sounds good. It's really, really interesting. I love the margin pressure indicator. It's sort of a very unique way of looking at price action. So, Evan, are you going to roll out the money flow, or should we do something different?
Yeah, so it's going to be a few. I want to show you guys a few things, and this will be more of like a longer term trade that I want to enter here for Bitcoin. And what we're in right now is we'll talk about the indicator market cipher. We'll talk about that. I want to show you guys first one. This is a pattern that's actually very significant. Unique to Bitcoin. It's called the ping pong pattern. And it's ping pong because it's like a ping pong ball. When you're playing ping pong, like a long volley just goes back and forth. And no one knows, you're just range bound. No one knows which way it's going to break out. And you have the 4 humps right here. 1, 2, 3, 4. Usually what happens in this pattern, you have a 5th one that doesn't work out as well. And then you end up at your local low area over here, which not saying that's necessarily going to go down that low, but I think there's a good shot we could end up at this spider line pocket right here. These are just support lines, just trend lines. They're diagonal trend lines, and they tend to work very well. Like look at how this was the top here. That was got close to it there. Other places here, they work very well. Let me show you the last time we saw it. Last time I saw this general pattern, drew it out right here. 1, 2, 3, 4, and then 5th didn't work as well. Didn't come up as high. The ping pong pattern bam, right to your low area right there. So these tend to be very bearish. Now, let me show you on Market Cipher. Now, we don't want to, I wouldn't just place a trade just solely on that. That's one of the things to look at. Market Cipher, what we want to look at, I want to start out with the 3-day on the VWAP on Market Cipher. Let me show you right here, the 3-day. So look at this yellow line right here. When it's been above the zero line for a while, this has been above the zero line for, the zero line is this white line right here. It's been above the zero line since the end of June. Usually when it's above the zero line for a long time and it finally starts to come down, it is very bearish. That's a bearish sign. It's rare that it's above the zero line for that long. That's pretty bearish. Also, this is what we like to look at in bear markets. Look at these RSIs right here. Very split, just like here. That brought us down. But if you go, it doesn't look like much.
Sorry to interrupt you. When you say the RSIs are split, are these RSIs with different measurements, or is this? It's not a standard RSI. Like what? Why are there two RSIs?
So there's the stochastic RSI, and then there's the other one as well. I'm not an actual expert on like the
these are actually so this is not just the standard RSI. This is a stochastic RSI, and then maybe a standard RSI. Is that what it is?
I believe so. I'm trying to remember off the top of my head. It is not the standard. It's modified a little bit for Market Cipher, but when the main pattern, both ways they work, bullish and bearish. Like if it's bullish, it would be down here. They'd be split the other way. But when they're split like this, see back here what all the way back here, these areas, bam, right down. These are big corrections downward when they're split, 23%, and then right there, 17%. Also, what we want to look at too is curving back down over here. This is pretty bearish too. This is almost kind of a head and shoulders right here. If you take away these two, that's a head and shoulders. So, and also the other thing we can kind of map out is, where was it? The one that's finally crossing into the red right over here, kind of a percentage. See how this crossover from red to green here gave us about 14%. Red to green here, we could do it kind of from this general area, 14% down. You could come down a lot here, and we've come up a lot. Right. So I want to do a trade where the stop loss is above this swing high over here, and I want to take my profits about 22K. I'm going to set it to take profits at 22K, but maybe, I'll wait a few days. This is more long term. If we map out when this could happen, it could be a few days here, August 14th or something, where we finally come down, kind of like that. So how about I'll go and place the trade here, but maybe I'll cash it out a little bit earlier if things change. So let's go to our Bitcoin chart on ACAP here to place it. And what we're going to do here, I believe I have it set over here. Let me just draw it out so I know where my stop loss is, or my stop loss over here. I'm going to take profit around 22K. We're going to mark it in here. So take profits that are stop loss. So
notice that incredibly tight stop that ACAP has, a tight bid ask spread that it has of only just $12 on Bitcoin. Very impressive.
Yeah,
I'm just pumping. I'm just shamelessly plugging our broker here, but that's fine.
Yeah. They're all different. You got to experiment with the different one, but so it's going to be let's see, 20. I may do just 25. Flat to wave or let me go to my stop loss. So I might take profit 25 flat to wave the red flag here, and then first take profit. I'm just going to go 22.01. And how much do we want to risk here? Let's risk. This is a pretty big trade we want to do. Let's do half of our account here, about 5,000. Let's risk, and that should give us enough room for the last trade. Actually, let's do 4,000. Leave a little bit more room for the altcoin trade.
Yeah.
And
leave it for the for the spin of the wheel. Okay.
Yeah.
That sounds good. Sounds great. Okay. So before we get to last trade, I kind of just want to take a moment and talk to you a little bit about what you guys are doing. What are you guys involved in? What's sort of like the latest projects, and generally just a little bit about yourselves. So let's start with you, Evan. What are you involved in? Where can people find you? And what are you looking to do in the next 2 or 3 months?
Yeah, so my main platform is YouTube, youtube.com/Evan Aldo. I'm also on Twitter at Real.
I'm familiar with that platform.
Yeah, with those. And so, it's mainly just looking at a lot of long-term accumulation for mainly Bitcoin right now. Like I was talking about earlier, altcoins, I'm definitely a lot more cautious on them. Trading them, sure, but long-term, I do think in all likelihood they're gonna bleed against Bitcoin. A lot of people don't realize Bitcoin typically bottoms out they bottoms out at the same time as altcoins, but it outperforms them for another 6 months to a year after. So one strategy, trade a lot of your Bitcoin for altcoins in 6 months to a year from now, what I'm planning on doing. Also pretty bullish on gold, other things that will hedge against the dollar, which we still have in America. I bought a used car or
gold
a new
is
car.
Dead money, my friend. Dead money.
Yeah.
Dead money.
Well, I think for a few years, it could outperform the S&P 500. That's all we're trying to do right now, outperform the S&P 500. Right. And another good investment I made was I bought a car, a $50,000 car about 6 months ago. Now it's worth about $55,000. An Acura RDX I bought about the MSRP. So that's a good investment too. Looking at tangible items like that, the once in a lifetime thing. So we are in very interesting times, very interesting times. You got to be prepared in those ways. Also trying to, I'm going to Costa Rica next month, maybe get into surfing for the first time. Want to try that a little bit. So one of the hobbies I'm into. So yeah, a lot of different things.
Okay. Have fun. This is, this is how you tell you're a young man versus me being an old man. This is not something I would even consider doing right now. But no, that sounds great. That sounds awesome. And what about you, Forrest? What's going on with you? What's happening? First of all, where can people find you? Obviously on Twitter also, right?
Yep. So my Twitter handle is at 0xstacker. 0x is just like a kind of like an Ethereum thing. And then at Crypto Stackers on YouTube. So those are my two big platforms. And then obviously we have the Crypto Stackers Discord for any Crypto Stackers members. And I'm in there quite a bit as well.
I'm just curious, how many members do you have in your Discord? Because
I want to say it's 2,500 to 3,000. I believe.
I was totally expecting you to say that, because this is what amazes me about just the size and scope of crypto communities relative to I run a trading chat. It's like 500-600 people. They're hardcore, but that's about it. But just the amount of enthusiasm I see in the crypto community just dwarfs anything else in traditional finance. It's very, very funny. So yeah, that's great. That's super great. Both of you guys publish weeklies, monthlies, or just whenever you kind of feel like content on YouTube that talks about the markets?
Daily, usually. During the week, probably 5 days a week. I try, not always, but I do try to do a live stream every day. And then for those who miss the live stream, I try to give a recap later in the day. Not always 100% it, but
what do you do on the live stream? Is it analytics, or do you actually trade on live stream too?
Sometimes I do trade, a lot of analytics. It depends, whether there's an opportunity in the market. I do live trades occasionally. I forgot to mention I do have a Discord as well, just like Forrest, and I do a trading group, a signals group in there as well, and I do have some good traders in there as well. So do that, and then one of the things I may be getting into, I may be switching over just for the live streams over to Twitch. They have a good platform for live streaming. And actually, you could have people call in, people on the stream with you, an audience member you like what they're saying. You could have them call in on Twitch. So that might be a lot of fun. More like radio, somebody calling in kind of.
Yeah, that's really cool. That's really, really cool. That's fun. Okay, sounds great. So we have our last and final most fun challenge of the day. By the way, my producer's telling me that the P&L between the both of you is just back and forth, back and forth. It sounds like you're pretty much dead even right now as to where the numbers are. It's very, very volatile. So what a surprise. It's very volatile because we're doing a crypto broadcast. But while that sort of settles out, let's do our last and final choice, which is we call our wheel of chance, where you have to press Control Enter, or click to spin. And I think the producers will stop. How does it work? I mean, does each person? the person says stop or the producer will stop. No. So they'll choose a crypto coin, and you're going to have to choose a trade on that coin. You're going to have to choose what you want to do with it, and that'll be our final choice. So we'll start. Let's do Evan first. So Evan they stopped you at Matt. No, we're going to go. They're going to spin you. They're going to spin you, and they're going to stop you at Matic again.
Ooh.
So
I wanted to
like, not Matic.
I got an idea for Matic.
Okay, so now let's take a look at your chart, see what you want to do with Matic. Do you have anything? Any views on it?
Yeah, Matic it's good that I want to show you something really cool on Matic right now. I believe it's on Matic. If I'm not, yeah. So what we have on Matic is just a textbook. This is a nice, especially in bear markets. What I was talking to you guys about earlier, the RSI is very split over here. Once they start curving down,
I see that really split.
Yeah, really split. This was probably the top in all likelihood, and then you have a little bit of you can see over here too, traditional TA. I mean, head and shoulders a little bit. Technical target would probably be at least like 79, 75 cents, something around there. So I think this is a real textbook, just short entry. And if you look at your daily too, just look at these momentum waves just curving downward. Some great curvature. It looks like, especially in bear markets, he came into the green here and then right back into the red. So I think this could bring us down quite a bit here. Now, where do we want to, do our short position, take profits, all of that? Our stop loss probably should be above the swing high over here somewhere. I'd say I like to do too a good thing for a nice even number for stop loss, like above 105, above 106, because I think if we do get higher than that, it'll probably be invalidated. And now what I want to draw is just a simple fib level to look at where I want to take my first profits. And here would be, this would be 1.32 would be a good goal. That's down quite a bit. Usually I do a less of a risk, like a safer risk reward ratio. I think a 0.8 would be perfect for this, like right in this pocket, right around 76 cents, I think would be beautiful for a Matic. And I think this is going to be a really good trade. So let's go to our short area here. And let's mark it in for this, take profit or stop loss. Let's risk probably the rest. This will be the last trade. So let's risk the rest of the account. I believe there's probably, our ETH trade from earlier, mine was actually hit profit. We made around $400 or $500 from the ETH short earlier. So I believe we should be able to put in maybe 6,000 for this or something for our last trade here. And I don't know if it's going to let us do that, but let's see. That's going to be a 1.06 stop loss. And we're going to do our first take profit at 76 cents, 0.76 here. And okay, it's saying we can't risk that much. We risk like 4,000 maybe. Maybe 1,000. We can risk 1,000, see if we risk 2,000. Not 2,000, 1,500 maybe.
Yeah, you good. 1,500 was good. Yeah, 1,500 was blue. It gave you
okay. It changed my my take profit. Hold on one second. Oh no. Oh yeah, it's 0.75. 76 and 1,000. Yeah, let's do that for now. Okay. So we got that in, and then we're gonna make $700 if we hit that point.
Yeah. I love the way you guys trade. It's very controlled, very defined, very within your analytical structure. It's a pleasure to watch you guys trade on this. Forrest, talk to me, my friend. Let's do we got to do the wheel. Let's do the wheel. Where's the wheel? The wheel's gonna spin. The wheel's gonna spin. Oh. Try searching in the Apple Watch app on your phone. Sorry, shut up, Siri. Okay. That was XRP. Oh my God, what is this? 2017? Okay.
Yeah, XRP. This is
XRP. It's an oldie but a goodie. It's like I feel it's like an Elvis record here. XRP. All right.
Yeah, this just makes me want to short it. Let's see. So I'm not keeping up with XRP fundamentals. They've had that court case going on forever. Let me go into Crypto Stackers Pro and go to, actually it's called XRP now. It used to be called Ripple. Pull up the XRP chart.
I'm like XRP.
First thing I always do.
You might as well do Western Union,
Right. First thing I always do is I take a look at the long-term chart, look at the easy bands. Is this in an accumulation zone? It's recently popped out of its accumulation zone. Doesn't mean that it can't fall right back in there. But from a long-term perspective,
Forrest, let me just stop you because these are really interesting indicators. So I want people to kind of absorb them. So this is, it's not Bollinger Bands. These are accumulation bands. So what are they wrapping? Is it moving averages? What is the construct that constructing these things around?
Yeah, so it's based off of the 21-week simple moving average. But if we go back for a second and remind ourselves of margin pressure levels, it's got this exact same calculation baked in, but just rather than selecting local lows and local highs, it's running and populating off of a 21-week simple moving average. And what you'll see is more often than not, unless there's just an insane pump, which in crypto there occasionally is, or just an insane dump. And then even when we do get an insane dump, oftentimes those buyers start coming in at these accumulation levels, at these easy band levels. And it's really less so the buyers stepping in, but more so that it becomes so high risk to short an asset when it's in this zone, right? When its price action has been a 21-week simple moving average has been in this zone. I'll throw that on right now. It's the yellow line, right? Shorting below the 1x short margin pressure level off of that 21-week simple moving average is just asking for trouble. Even in the barest of bear markets, it's just very high risk to do that. And that's why you'll very infrequently see any asset, let alone XRP, drop significantly below these levels. We've recently had a few spill out below these levels with this most recent crash, but XRP is held.
And just to understand the solid lines, is that a 1 standard deviation away from the dotted lines? What is that channel?
Nope.
Basically, the green.
Right. Yeah. So the green dash line is basically the 3x margin pressure level off of the 21-week simple moving average. So Bollinger Bands are essentially just standard deviations off of this. Rather than standard deviations, we're calculating the margin pressure levels off, right? So this is a 3x long margin pressure level and then a 2x long margin pressure level. The green is just different margin pressure levels. So oftentimes you'll see the green dash or the red dash act as support or resistance, but really where you can really get some nice reversal opportunities.
It's very rare that it's going to break the channel. It's very rare. Like basically, if anywhere within that channel, that's actually a pretty high probability buy point or a pretty high probability sell point. It's very rare that it spikes through the full 3x, 2x margin pressure like you see, right?
Especially if you're just looking for spot positions. These are big money makers for me for just spot positions. If I'm looking to not take on a ton of leverage because it's not an exact science, but I see XRP all of a sudden spilling into this band. Okay, it's probably undervalued at 19-20 cents, and you don't even have to use leverage to ride it back up to the top of the band. Right now, we've just been riding this green band down for a very long time. We are due for a trip back up, but again, we're in the midst of a bear market, so there's no guarantees here. Since we're looking more kind of on the weekly here, I'm seeing us find some. One bullish thing that I'm seeing is that we have actually broken through the green dashed easy band, which is bullish. Price is wanting to go up, but we're getting kind of compressed below from this previous resistance here. And if I throw on our long margin pressure levels from our local low, we are getting rejected for about the third or fourth time and just accumulating underneath this resistance level. I'm gonna short here. I don't love going short when we're this is prime time for me to look for reversals and big moves up and look for long entries. But because we're looking at a 3 to 7 day time frame on this trade, I'm just going to play this resistance here and say, hey, this resistance is held 3 times below. I'll keep a stop up here and I'll look to target lower.
Super good. Okay. Sounds interesting. Sounds good. So we have all of our trades in. We're obviously 5 days from now, we're going to call the winner of the show. So obviously, anybody who's watching, please, of course, as always, subscribe to the Trading Battle. You get the best ideas here. Every time I host a Trading Battle, I learn something. So I can imagine if you're watching a Trading Battle, how much you could learn from every one of our guests today. And follow us, TTB_live on Twitter all the time. And any place where they can reach you. Obviously, real Evan.
Real Evan Aldo for Twitter. For Twitter, real Evan Aldo, and then YouTube, obviously Evan Aldo. But and then I do have a Discord. The link is in all my YouTube descriptions. Those are 3 main places.
Super, and and Evan does an update every day, so that's a really valuable resource, which is great. And thank you for teaching us about the money flow
market cipher, money flow, RSI is VWAP,
right. And Forrest, they can find you at OX Stacker, 0x.
Yep, 0x Stacker. 0x Stacker and Crypto Stackers on YouTube. CryptoStackers.pro is the website if anybody's interested in getting those Crypto Stackers Pro indicators. Actually, it's funny that Evan mentions Twitch because I'm going to be looking to move to Twitch soon too. Twitch is looking to up their crypto game.
You should have a Twitch off. You should have a Twitch off on Twitch. You should trade against each other.
Yeah, we'll have to collaborate.
Yeah, 100%.
Exactly. That'd be awesome. Awesome. Well, thank you guys. Thank you so much, both of you guys, for coming in. Sorry, one last question I should ask you is, what are the charities you guys are trading for? Evan, what are you trading? Which charity do you recall?
I am trading for the Cancer Research Institute, primarily because I've had a lot of family members that have had cancer, and I've seen how much it affects people, and I think that's one of the most important things to try to do more research on and go after. So
yeah. There's a lot of radical new research being done, and hopefully, there'll be some breakthroughs coming up soon. It's definitely, I think there's almost no person in the world that's not been touched by their family members, including yours truly. Yeah. And what about you, Forrest? What charity are you trading for?
St. Jude Children's Hospital. So St. Jude just does a lot for sick children. It's a great cause, and it'd be fantastic if people could donate to it.
Yeah, no, that's great. Both great charities, great trading, excellent trades. You can see these, one of the ways that guys are really good traders is these trades went into money right away. I mean, that's just great calling, great chart analysis. Thoroughly enjoyed it, guys. Thank you again very, very much for hanging out with us. And I will see everybody next week for the trading battle. But for now, in the meantime, follow us on YouTube, follow us on Twitter. And in 5 days, you're going to be able to see who's going to be the winner of today's trading battle. For Trading Battle, this is Boris Schlossberg. Over now.